I'd like to also now call up, as we continue this idea of the redefining retail investment. Please, David Cook, the director of Actis, is here. Warm round of applause for you, David. Come on in.
Thanks.
You're most welcome. Please have a seat there. And Jeff Ziedell, the independent non-executive chairman of Fortress Income Fund. Jeff.
Thanks.
Right.
Well spoken.
As I listened to you, Jeremy, and I took on board what you were saying, I didn't know whether to be pleased and happy that the revolution was underway, a transformation, as you put it, or be worried that we don't know where it's going. Which is it?
Well, I mean, it's certainly going to provide opportunity, but I mean, the reality is that we don't truly know where this is going to take us, the investment market, and therefore, ultimately, it's about creating something that's resilient, an asset that will be able to deal with these changes. I would argue.
Jeff, when you look at what you've heard and you compare it, the South African experience, where, according to Jeremy, you know, it shows signs of all the different types of mature to emerging markets in the same. What do you make of it?
No, he's 100% right about that. In fact, it's quite interesting as you travel around South Africa. Just to give you a bit of background in terms of where I've been and what I've been involved in, you know, we've got Resilient Properties, which is involved in non-metropolitan dominant malls. So it would look not only at the particular city it's in, but all the surrounding areas as well. And then there's the company Fortress, which would look where there's lots of feet. So that would go to the townships, it would go to where the taxi nodes are. And with regard to all that, they're two totally different markets. And where you're finding that when you're looking at, you know, it's quite interesting when he's talking about, you know, online shopping and all the rest of it. I think South Africa is a bit behind in terms of that. I think it's going to happen, but I think it's going to only happen in certain urban nodes, and that's probably going to take quite a long time. So,
right, but the fundamental strength of the retail sector you would describe as what?
Well, I would say that, again, it's in two sectors. I think the dominant retail is trading particularly well. So in other words, where the shops are right-sized, where the stock is absolutely whatever anyone's looking for, and then when you go to the outlying areas, you've got social spending. You've got, you know, they were talking yesterday about, you know, the grants that we've got. Now those grants go immediately into the tills. So when you're looking at the rural type of areas, township type of areas, there's a whole different dynamic out there. Where there's the social grants play an enormous role in terms of that.
David.
Richard, I'm a big believer in the opportunity in South Africa in the rural story. I think there's some question marks right now in terms of the consumer resilience. But I think
let's tell me what the question marks are, and then we'll come back.
We've seen some softening in the consumer sector at the lower end of the market. And certainly in some of the consumer finance, there's been a lot of debate in the South African economy about bubble or no bubble, and I think the debate still continues. But I think from a South African retail point of view, where there is an increasingly interesting opportunity is north of the South African borders, across the sub-Saharan African continent. The demand for modern retail in the African continent is astounding.
Right. I'm going to be fierce here, because every panel that we've had has sort of very quickly wanted to jump outside the borders and head off either into sub-Saharan Africa or into other parts of the world, which we will get to. But I want to keep it in South Africa for the moment. In my preparation for coming down to South Africa, the one word I heard of in retail was saturation, saturation, saturation. Is that true?
I showed us a chart which looked at densities, and South Africa was towards the top of the chart.
So it's true.
well, it would therefore depend on particular assets. But
I don't think it's true. I think there are nodes and there's certain urban areas that it certainly is true, that there's an absolute overconcentration of shopping centres, the similar type of tenants and fierce competition between the different retailers right there.
Now, is that at the top end, the middle, or the low?
No, I would say that's probably the middle to upper end. That there's and it's normally in the urban areas, but it's happening in some of the bigger towns in terms of going forward. But at the moment, it's not there.
My answer would be, I think you have to look within the segments of retail.
So let's start at the top end.
So, well, I was going to look at more from a vertical point of view in terms of, if you look at the food retailers,
Oh, please.
modern food retail and the big players in South Africa are pretty dominant in the food retail sector. If you look at an adjacency like pharmacies in South Africa is still dominated by the independents. So I think there is still a lot of room for growth in the large, as an example, in the large pharmacy space for consolidation in that space. And then you're looking at what, coming back to the food retail space, where the focus of a Walmart, Massmart has been in terms of really penetrating that lower end of the space. And I think there's lots of room to go there. There is still quite a high predominance of the lower end of the consumer market who are shopping in the informal sector in South Africa.
What's happening a lot, and I've seen it, especially taking from a resilient point of view, and some other developers, is that the food retailer is the one that's driving the new shopping centre. In other words, the food retailer is going to the developer to get the new shopping centre. So what's been happening of late is that, in fact, a lot of the shopping centres now would, in fact, incorporate 2 supermarkets. So that would then stop another competing one, but again, that whole thing of dominance. That dominance is what plays the absolute part in terms of getting, that marketplace absolutely knuckled down.
And once that happens, then everybody else piles in.
Yeah, but there probably won't be another development, so it won't be an oversaturation. That's what it's done.
So what worries you most in the South African market at the moment, David? What worries you most?
Sure.
Because as I looked, again, the rentals have maintained, the premiums have maintained, everything else seems to have been okay, but everybody still tells me that they're slightly worried.
I'll give you a straight answer. And for clarity, I spend my time looking at consumer opportunities in South Africa, retailers, but we don't invest in the property sector in South Africa. But in the retail segment, my own view is the valuations of retailers in South Africa is extraordinarily high. So if I were to invest in a South African retailer today, I would be very cautious as to whether I was overpaying for an investment in that space.
Really?
Yeah.
I'm quite optimistic.
Would you agree with him?
Well, I think in terms of some of the share prices of the retailers is quite high. It's quite interesting that most of those retailers, there's foreign investment in terms of that. There's a very, very high proportion is now owned by foreign investors onto the stock market of all the retailers. But in terms of, I just find at the moment that there's still, the turnovers are coming through, the tenants are trading particularly well. What's happened is that the marginal centres is where the problem is. So you get the bad news from a marginal centre or something that's, has lost its dominance. And that's where they're not trading as well as before.
You see, I wouldn't necessarily just say it's that the retailers are about to be in trouble. I think from an investor point of view, you're overpaying for the growth that sits ahead of it.
I want to show a slide. Can we have the slide that Jeremy showed earlier? Let's bring it immediately out of South Africa. And let's look at, can you show, I think it was slide 31. There we are. This was your, well, we'll see it in a minute. This was your slide 31. 20 African cities that will make their mark on retail. Can we put it in the middle? Do we stand a chance of getting in the middle? Not sorry. Can you see this list? You've got everything from Casablanca right the way down to Durban. Of these cities, there we are, now we can see them. Which ones do you like? Jeff?
Well, I like the South African ones. So that's a start.
Don't you start.
Nigeria is somewhere that the group is getting very much involved in. And I'm sure in the next panel they'll talk about that because one of our partners is involved in that. Angola is the one, that people are showing interest in, but you've got to really...
Which one?
Luanda.
Luanda.
Oh, Luanda. Sorry, Luanda.
At the bottom, at the bottom.
Yeah.
That's a lot of interest in terms of that, but that's cowboy territory. But the guys like it.
Cowboy territory.
Well, we can have a few cowboys in there.
What are you most afraid of there?
No, I think the transparency. Who owns the land, the language, bit of corruption.
A bit of corruption.
A little bit.
I worry that as we've seen in China and that we've seen in India, that expansion into Africa will be driven by egos, who will be building these wonderful shopping malls that don't necessarily respond to the local requirements. And that's what's happened almost in every emerging market, is that it's ego-driven by...
You've seen this before?
In some markets, yes. Yeah.
I've got to challenge that.
Sorry?
I've got to challenge that. We are live building shopping malls in Accra, in Lagos.
How big?
Between 20 and 30,000 square meters. In Nairobi, in Lusaka. We don't invest in real estate in North Africa, but I think certainly in Cairo, very interesting opportunity. Perhaps contrarian
You must
at
have
the moment.
balls of steel to be going in those places.
If you have people on the ground, you can see the risks before.
Yeah, but nobody could see the Arab Spring.
No, but there's fantastic investment opportunities in Egypt at the moment, in some of the more defensive sectors, getting away from retail, because I wouldn't call that a defensive sector.
Right.
But the retailers are just forcing the pace of change. They're demanding high-quality shopping malls, and they see the opportunity and prepared to go quite deep down the risk curve.
The retailers.
The retailers,
Yeah.
yes.
They're demanding the property.
Yeah. So it'll be driven by the retailers, ultimately.
Why do I get the feeling it's all going to come to grief?
You do?
I do.
I think you're underestimating the African consumer. You're underestimating the African consumer.
Is he right?
Yeah.
I really do. I mean, the quest for quality in sub-Saharan Africa from consumers is no different than consumers around the world. When we built the first international grade shopping mall in Lagos, the response of many of the, and I must say, many of the developed world investors said Nigerians don't need shopping malls. I mean, how patronizing can you get? The queues still, over 10 years later, outside the Palm Shopping Mall on a Saturday morning are astounding.
Go ahead.
The demand is there. The supply side is a hell of a lot harder.
It comes down to, I don't think there's going to be any grief because everyone's going with their eyes open. So as long as you're going in with your eyes open, you do the planning, you do the checking, you do whatever you need to do along the way. So there's no surprises because you're expecting the worst.
I think it's about a long-term perspective because, any of these markets will typically go through emerging market volatility, and there's been very few emerging markets around the globe that haven't gone up and down, up and down. So you have to ride those cycles.
You are also in Europe, correct?
Correct.
Not just in Europe, mind.
Some won't agree it's Europe, but it's
Sorry?
Europe. Some in the audience won't agree it's Europe.
I think we've talked about Where are you? Tell us about your experience.
Okay, and interesting, we were looking at a situation of getting a rand hedge type of scenario, okay, and looking where we felt comfortable, high growth, under-retailed, under-shopped, shortage of office space situation. And where we've gone to is Romania.
Sorry,
Okay.
Romania.
Romania.
I see.
And Romania is actually quite an interesting one because what you find within Romania is that there are 23, 24 million people in Romania, but only 2.3 million in Bucharest. So you've got a spread throughout the whole country. It's totally undershopped. The consumer there is very conscious, but didn't have the choices. And what we
When did you start in Romania?
we started in about 2008.
2000 and...
8.
Right, so just
So-
at the crisis.
No. Well, that was actually a bit of an advantage because it got rid of all the opposition.
Would you have
But-
would you have gone ahead in Romania if you had known about the Eurozone crisis?
I think definitely. We very comfortable with, we earn the same euro in Romania than the people are earning fighting in the property market in Paris. But one of the big advantages are that you get a situation, when you're looking to do a shopping center in a really strategic position, there are very few cities in the world that you can still find prime property. And what's happened there is that the EU came along with a master plan for every one of the cities, and they were getting rid of the factories and the big industrials. So you could find a 10 or 15 hectare site right in the middle of town. That was a massive advantage with lots of transport and big growth.
I mean, it's a market that gives you depth because it's
bankrupt.
because there's lots of cities and
It's
therefore
bankrupt.
retailers and
The economy is virtually on its knees.
but they still need to shop.
Well, that's a bit like saying they've still got to put clothes on their back.
They do, yeah.
Doesn't mean to say you need to... go on.
No, well, you know what? You take a scenario, their debt to GDP is something like about 35-40%. We're not in the Greek and all the rest of it. That's in big trouble. We're seeing massive growth. We're finding, for us, it has been absolutely superb. The worth ethic, I mean, if you speak to anyone here from England, they'll
Anyone
say...
from the UK?
Yeah, well, how about Richard Quest? There we go. Always worried about the Romanian that had come into there and how, when they open the borders, how they're going to come in there. But I'll give you an example. We built a shopping center in Romania, an existing hypermarket, and then we built an extra 44,000 square meters, absolutely top A-grade shopping center in 11 months. They work 24 hours a day.
Right.
Okay, very few countries around the world can you get that done.
This revolution that is taking place, or this transformation that is taking place, when we see, I think it's in Australia, was it, the shop that was charging people to come in just to look, because people are doing this idea of people...
Well, I can answer a bit to that, because what Australia did, which is quite interesting, is that if you bought on the net and you had it imported for less than 1,000 Australian dollars, which is a little higher than the American dollar, it came in duty-free and all the rest of it. And what was happening with the retailers overseas is that they would then send it in free and all the rest of it. So what people were doing is that they would go along for anything that was under $1,000 to the shop, check it all out, get all the serial numbers and all the rest, and then buy it on the net.
Has anybody done that in this room? Has anybody gone into a shop, looked at something, and then gone home and bought it on the net? No, surely not. Does that transformation and revolution pose a major threat and problem? Not that specific example, but that shift that's taking place, Jeremy.
Well, it does in terms of covenants, in terms of lease flexibility. We estimate that as 20 to 30% of the stock will be obsolete, but it then provides an opportunity in terms of logistics. Some shopping malls are now looking at click and collect, and so it's just adapting. People are finding new opportunities from this structural change, and that's where the excitement is.
David, if you had to look to the future, please, for me, and define the retail experience or the retail space of the future, what would it look like for you?
Goodness me. I'd have to look through an emerging market lens.
Please do.
Because that's where we invest. I think there are pockets of accelerated growth across our different emerging markets that we invest in. So I think it is still, you look at modern retail penetration in Egypt. Yeah, the number's somewhere around 10%. compared to somewhere like Brazil, which is growing very rapidly. So we are seeing a far more frequent investment opportunity in retail in Brazil at the moment. Those sort of family-owned stores that have built themselves up to 30, 40 stores and are now looking to build to 200 plus. That is accelerating very quickly to sort of South African type levels. So it's a really mixed story. Whereas Nigeria, we're right at the very early stages of that. I mean, there are literally a handful of A-grade shopping malls across the entire country of Nigeria.
Jeff, if you had to look forward and define for me and for our guests here what it is that we should be looking at in the future.
Okay, just before I answer that, just to your last question, I was in New York in December, and I was with the chap that stays in San Diego, and we went into a store where they were selling fridges. He happened to be in New York. Fridges. But he lives in San Diego, and we were in New York. And he said, have a look at this. And he took out his iPhone, and there's a thing called Price Check. And he got the price of that, but he went over the scanning, and then gave him a list of everyone that sells that and the prices. And what he did is he was actually connected. He was looking for a fridge. And
Thank God.
He actually bought a fridge somewhere else, on the net, while he was sitting there. And the next day he told us it had been delivered. So, so that is...
But hang on. We can't just dismiss that, because in a nutshell, that is the transformation that you're talking about, isn't it?
Yeah.
That's right.
That is changing the rules. In a nutshell, all right, maybe not in Nigeria, not in less developed markets, but in more developed markets, that is changing the formula.
Well, that's right. But just even sort of 2 or 3 years ago, we didn't even know that the sort of mobile telephony would actually be changing the shopping experience. And so we just almost don't know what's ahead of
You see,
ahead.
this is what I'm being polite here. What I'm really wanting to say is you've no bloody idea. You're building boxes in new markets where people are seeing these things for the first time, and they're pouring in your emerging markets. Meanwhile, in your highly developed markets, people are going around shopping on their phone and buying fridges on the other side of the country.
Well, that was in New York. But, that's Australia and New York is ahead of the curve, I think, with regard to that, and London, New England.
Perhaps we have no idea. That's it. And therefore, you have to think about resilience in terms of what I highlighted, which is a good location, that an asset that is easily adapted, that has the latest retailers and on shorter leases, and is future-proof through technology.
That's right.
Yep.
Be prepared
Yep.
to get out of jail free quickly.
Yeah.
Is that basically?
Well,
Because you're picking the low-hanging fruit, frankly, aren't you? You're going into emerging markets, and you're in Romania.
Early
It's
stage of the curve. Absolutely.
It's low-hanging fruit. It's
Absolutely.
easy stuff.
Correct.
Undeveloped, building boxes, putting in retailing.
Let me give you an example. In the most undeveloped, in Nigeria, we've got a fashion business across Western Central Africa. Predominantly sells its product through the informal markets. That's hard work for as a consumer, fighting your way through to find the product that you want. It also has a network of around 30 retail outlets. What we're doing at the same time, though, is building an internet strategy. And what's interesting is the uptake in the internet strategy, even in places like Lubumbashi, has been phenomenal, because people are looking for something different than perhaps they're seeking in the Western world, developed markets. And that's a security that the product they're buying is real. Because counterfeit, particularly in the fashion space, is prevalent. So people are now buying online in places like the DRC, which I don't think many people would expect.
Yeah. But I think the most important thing at the end of the day is to be cognizant of the fact that that is happening worldwide, be conscious to watch what's happening in terms of trends going forward, making sure that the shopping centres have got what the customer wants, lots of restaurants if that's what you're looking in terms of eating out, the coffee shops, the movies, the ice rinks, whatever it is, making sure you're ahead of that game, that people actually, their social life revolves around the shopping centre. Right. Should you notice a change, the most important thing for any good company to do is immediately. So if you see Resilient selling all their shopping centers, you know they've actually seen a problem coming.
Which leads us back to you finally, which is this, the change is taking place, be ready to move very quickly.
That's right. What? Yes.
No, I mean, that's basically what it comes down
Yeah,
to.
absolutely.
Because so leave people with a final thought.
What makes me curious is really how South Africa will respond to these external capital that is that's floating around the world, and at the moment my observation of South Africa, and this might be provocative, is that it's still quite insular.
Are you?
And
Are you?
And in the sense that there's not a huge amount of cross-border activity. So I'm just fascinated to see how the country will respond to that over the next couple of years.
We'll talk about that in our next panel. Sir, a final thought.
I mean, let me ask, as a South African, I think I can say it. I mean, I think historically we have been insular. I think the retailers are learning very quickly, particularly as many are now looking to expand north of the borders. And here's perhaps something slightly unique for South Africa, because the reality is, who can argue with the whole globalization trends? But relative to, in the retail sector, relative to some of the other consumer sectors, globalization has actually been quite slow. There are not that many examples of successful international expansion stories. And the South African retailers looking north of the border at the moment could actually get a jump on places in terms of expanding into other emerging markets.
And taking that point, which I agree wholeheartedly with, but I think that we've actually, and which Jeremy highlighted also in his presentation, is that with a lot of the international retailers, they're all looking here, and I mean, we've got them in Romania, and they're all looking to come down, and they all think we're a bit too far away, but you know, it's a whole new market for them, and I think that that's going to be a nice pickup that we're going to have as well. I think there's going to be a lot coming.
Ladies and gentlemen, thank you.